Okay, let's start. I'm ready and Penneo is ready. So thank you for being here again. And thank you to Penneo as CEO, Christian Steneved, and CFO, Kasper Christiansen, to be here. So please go ahead with the presentation.
Thank you very much, and thank you for the opportunity to speak. So we have prepared a small introduction, very short, and then Kasper will take into our SaaS metrics, and then I will take an outlook. So the very short version of Penneo, we are business-to-business software as a service with focusing on digital signing and all the document workflows around that and KYC, so we know your customer under anti-money laundering. And we have customers in the Nordic countries and also outside in Belgium and Germany. And our aim and dream is really to become the factor standard for auditors and accounting across Europe. We are approximately 90 employees with 20 nationalities. And really our beachhead segment are the auditors. And by beachhead, we mean this is our primary segment that we go after. When we enter a country, we start with the auditors and accounting. What we are really focusing on here is automation or digitalization of their manual processes. We are most maybe known for our Penneo Sign solution that we have offered since the very beginning. We also have our KYC. And with both offering, we have really focused on automating and digitalization of manual processes to make it much more easy and at the same time stay compliant. And when we are now expanding and looking ahead, we are also looking at, could there be other areas where we could potentially digitalize, so we make it even more efficient. So that's the key focus. And from a strategic point of view, now we said that tier one is our auditor and accounting customers. And from there, we see a network effect of, so when they are using it, then their customers are, they are signing or they are onboarded with our KYC as a client onboarding. Then they also are their end customers. They also start using it and get inspired by, okay, this is a great solution. And then they also start using it. And after our tier one with our auditor accounting, the next in line that we also have a key focus on more and more is the Aml Government Industries. So those industries that are also regulated by anti-money laundering, where our KYC solution together with our sign solution really can be a benefit to them. And then our tier three is the network fit to other industries. And we really have this vision and mission is if we can really make this world where being accountable for the way we do business is a matter of course. If we can support with that, that is our vision. And coming into the way we look at the market, we are riding on top of the expansion of the electronic ID in the different markets. And here we have just shown a map of Europe where we see each country with their electronic ID. And a key part, as we can see on the right side, is the coverage. We're used to here in Denmark and in the Nordic countries that there is a very, very high coverage of it. We use it all over for many, many things. But what can also be seen in other countries, it is not as high. And so the more mature the market is, the more it is used, the better fit it is. And that is part of our European expansion to ride on top of the expansion of electronic ID, both for our KYC, but also for our sign product. So that was a short introduction to who we are and what we are doing. And then I will hand it over to the SaaS metrics and the numbers.
And I know that everyone on this seminar is focusing on SaaS business. That's why I've chosen 5 slides on the next 5 slides where I present how Penneo is thinking about SaaS. The first is the slide that I always show when you have this quarter report events. And this time I'll just focus on that. This is one of the core things about being a SaaS company. We are focusing on how can we deliver value for our customers so they're growing year on year, while we have a very high net retention rate. At the bottom of this chart, you can see all customers coming in 14 and the annual recurring revenue for that portion of customers. So what is unique for us and what we are focusing on is to have a low churn and to have a high uplift on our customers. And it's pretty unique that year over year, all our cohorts is growing, as you can see on this slide. When we do our cohort analysis, we can see that if we look at the first 5 years, a customer is a customer, even if it's an auditor or an enterprise, it could be, I don't want to name drop anything here, another not audit company. On average, each single cohort is growing on average 16.5% per year. So that's a core thing about being focusing on deliver a subscription to our clients. So we can see this stickiness. This is the latest quarter report at the end of Q1. We have a backlog 12 months where we can see how have we developed our portfolio running this 12 months. Approximately half of our growth is coming from the current customer base, highlighting how we are working with our clients. On the left side, you can see that we have an okay low churn. We are pretty humble about that low numbers. As least is below 5%, we are very satisfied. On the uplift side, you can see that we now, and we have done for a year now, selling a second product and a second revenue streams to our current customers. So if we're talking about being a SaaS company, we are focused on how can we create more use cases within the Sign product and how can we add more value streams, meaning that in the end of 2020, we acquired a company who had developed a Know Your Customer solution. And in the middle of last year, we started selling it on a bigger scale, while you can see a part of our uplift, our net retention rate is coming from the existing customers on this new product. At the same, on the new biz, we have this original Penneo Sign product, and then we now can start see that a lot of customers is asking for the Know Your Customer, so we can use it as a new market enabler in new markets. They have a different thing about the product, so it varies what kind of product we can go first with, but our vision is to land and expand. So when we have sold one product, we will start positioning the other product to the customers. This is the last 12 months, the last 4 quarters of our SaaS numbers. What you can see here is that we are paying approximately 28,000 Danish crowns to get one new customer in. A customer is having an AR the first year on 19,000, and here you need to remember the uplift on 16.5% per year. So when you as a SaaS nerd do your calculation between the customer value and your CAC, I'll not be the person to decide what time, how many years you decide a customer should live, but now you have the figure you need to do your calculation, and some will put an terminal a growth after the 5 year on 0, and some will continue growth on the current customers. Yeah, I think that's it for it in terms of SaaS.
Yep.
And this chart show what we are proud of. This Q1 this year is the first year where more than a half of our new biz AR is coming from outside of Denmark. And since the IPO in 2020, we have worked on being more and more international as a company, meaning that when we are hiring new people, we are glad to see more international people coming in. And when we are targeting customers, it's also pretty good to see that it's outside of Denmark the customers is coming from. As you said, Christian, our EID is enabler in new countries in Europe, especially when we talk Sign product. And this is the last slide for me. Shows the relationship between the growth in AR and the cash we are spending in the operation. And by cash, it's divided on the long-term investment, meaning product development. So what is the product that we are going to sell in next year, the year after, That is one part of the investment. The other part is to scale the sales organization. That's more medium short term. So how much would you sell next year is a matter of how much do we scale the sales organization this year. This chart shows that in 2020, the year we raised 50 million and became listed on the First North, we have a relationship between the growth and the cost on 1.8, meaning that every time we scale 1 crown in ARR, it costs us 1.8. That's in the start phase of an investment period. You do a lot of investment, put up a lot of fixed costs on your P&L, and then you expect your ARR to grow, so you actually spend more money than come in. And when you're at the end of such an investment period, you need to see that you are just spending what's coming in. You cannot continue having a negative cash burn. So that's what I want to highlight here. If we look on the 12-month period, at the end of Q1, we had a relationship between the cash spend and the growth on 1.1. And what we said back at the IPO, if we do not raise further money, we will see that we at the Q3 in 2022 have the same outbound cash flow as inbound. Being cash neutral or cash positive. I think we'll even if we hadn't raised the money in Q1, we would have continued spending as much as we could afford, investing into growth. Yep, Mike, over.
Thank you. So that was into some of the metrics. Then looking at the outlook. So now, based on where we are today, we have 2 areas where we would like to expand and grow. One thing is growth in existing markets, and another one is geographic expansion into a new market. And that we do through 3 investment streams. One of them is upsell our Penneo KYC product to auditors. So from the very beginning, auditors was one of our key segments, and we have sold to over 700 auditors, and they are also a target customer for KYC. And now with the acquisition we did of the KYC product at the end of 2020, that we have now matured, and as maybe some of you have seen, we have also sold to some of the big 4. We really have a goal of upselling our KYC product to all the auditors of our, both of course our existing customer base, but can also be to new one. So that's one area where we would like to invest to see the growth, and that goes both for growth in existing market, but it can also be going into a new market. It can be through the KYC. And another one is that we penetrate even more what we call Aml Government Industries. So those that are in need for KYC, and that is the financial industries, property management, like leasing companies, real estate, and others. They are all in a need for KYC solution because they are all regulated by the anti-money laundering regulation. And we see there an increased demand for the KYC. They simply have a need for it, and together with our sign. So do more investment in that to take even a larger share of that one. And then last but not least, fuel our expansion through the audit and accounting vertical in Europe. So really have a geographical expansion. And how we will do that is by when we enter a market, and an example can be when we enter, for example, Belgium. Yeah, there we start with approaching audit and accounting, and then sell our solution to them first, and then go after some of the big ones, and then take as many as possible, and then becoming the one where say, okay, an audit and accountant, they will use Penneo sign, and then afterwards, then we can upsell the KYC. So those are the 3 investment streams that we have had, and there was also what we have went out to the market and raised the growth capital that was to accelerate this strategy. So when we in March announced that we have raised additional 60 million, yeah, that was to fuel this to even further accelerate it. So that is how we go forward, and for that as we also saw in the earlier slide about the electronic ID, it's really the whole digitalization that is going on and that we have experienced in Denmark and in the Nordic countries, that is also very high on the agenda in the other markets. As some of you might know, for example, the Chancellor in Germany has said that is one of his 3 highest priority is the whole digitalization, and we can play and role in that, and that's our expansion plans to take advantage of that in the different countries. Not that we specifically have chosen to enter Germany now with full speed. Belgium is one of them, but it's really some of the things that are in consideration, and that's what we have raised the money for. And as part of that is also, now you went through some of the metrics on it, and there we know when we look at the customer acquisition cost as an example, when you enter a new market, then it would be at a higher cost initially when we do expand. But then when we then get a position, then we do expect that domino effect within for audit and accounting as a first step, and then the same network effect to other industries as we have seen in the Nordic countries. So that's the way we will go forward. So that was on our what we raised the growth capital for and what we are using it for. And that also then ties into that this is our guidance from starting from the IPO and how we have met them, and also our latest guidance for 2022 with a year-on-year growth of 40 to 49 that we expect here at the end of 2022. So basically continue to grow. But at the same time, as one of the changes that we have done when we adjusted here in our latest, when we went out with our quarterly report on the EBITDA, we have adjusted it from between -5 to -10 to between -15 and -20. And that is a result of raising additional growth capital and then start spending it. As we have said all along, yes, it takes some time before we see the full effect of that, is because that's organizational growth that we are investing into. So meaning more people. So we are really in the area of hiring right now to get more people in sales and marketing and more people in product to support the growth that we have here. And that has at the beginning a result of a lower EBITDA compared to it, but with the result that in 2023 and onwards, we will then compare to, if we have not raised it, we will see some higher growth areas, just like when you explained it, the numbers that we have had. So that is how we plan to go and what we are following. So we will never run out of cash, but we will spend it upfront here to see. So as long as we see that it is a good business case of getting more customers on board based on the full life cycle of the customers, yes, then we will continue to invest in it. And that's how we also use the old SaaS metrics. So that is end of our presentation of our SaaS numbers and outlook, and also a short introduction to Penneo. And then I can see there are some very relevant questions already that we are now ready to take. Any questions that you might have?
Yes, great. Thank you, Christian and Kasper, for the presentation. So let's take the questions, yes. And as you mentioned, we have a lot of them. So let's start with some of this that you mentioned here, Christian, about the situation you're in right now. You're hiring right now, and there's a question out here. A tight labor market is still in Denmark. So are you able to actually fulfill the growth plans with the current market conditions in terms of hiring the people that you need and so on?
Yes, and I think it's really a relevant question, and it's really something else that is very high on our agenda internally. So what we have done since we raised the additional capital is we have hired 2 talent acquisitions. So now we do it internally as internal recruiting, really to put full steam on attracting them, new talent to the team. And then we have a broad outlook on where we get the resources for. So we hire from all over the world and get them to our office in Copenhagen. And that we have done successful so far also earlier, and we are continued on the same with the same strategy. And by that, having, you know, say, a larger pool of great talent that we can then attract to it. So that's the way we would come about it.
And maybe I can add just a short arc here. This month we have hired our first person on the ground in Belgium. So Werner is starting up a new office in Belgium. So a small portion of the sales reps will also be outside of Denmark.
Okay, cool. So there's also another question about the market, but it's more related to that there are a lot of talks about the slower growth right now, but due to, you know, people are less have not the same appetite for investments in software solutions. So do you see this trend, or are you actually protected in your industries from not being so, you can say, cyclical with your solutions?
Yeah, again, really relevant. So on one hand, when we look at what we are doing, our signing product where we are digitalizing manual work, you know, so there's a clear efficiency advantage to this and ease of use. And for our KYC, the same thing. If you didn't have a solution like ours, you had to do it manually, and it's based on regulation, so you have to do it. And therefore, it's a clear advantage to have a tool to it. So both things, there's a clear advantage. And if you can save money and make things easier and be compliant, why would you not do it? So on one hand, it is true, you know, whether there is this climate or not, they should buy, and we also expect that. But at the same time, we do experience that it takes a little bit more time, the sales cycle, because the buying cycle is they need to get it approved. So every initiative now in many companies, they say, okay, stop. Not to stop it, but you need to ask maybe 1 or 2 additional steps before you get it approved. So, and that takes simply calendar time. So it might be a little bit longer sales cycle than we are used to. But we expect that the type of product that we have will not be as such by what we are seeing now in the market.
So let's move to some of the numbers and the SaaS metrics. Kasper, you also mentioned this growth ratio, and I really like this way of monitoring how much cash you're burning in terms of how much your ARR you're getting in. Do you have, even though you have this focus on ARR and growing, do you have some long-term targets, or do you expect this ratio to decline as you matures? And so what are your thoughts on this?
And I need to be the boring part here, saying that we haven't disclosed this part measurements on our guidance. But of course, since I highlighted this on the slide, it's also a core part of our guidance overall. So yeah, we expect the positive net retention rate to continue, but I cannot, you know, give out any numbers what's expected. But we, of course, one of the main reasons for acquire the know customer solution back in 2020 was to start having a second revenue line. So if we see cohorts have fulfilled their targets for signing, then we have another revenue streams to offer to the customers. And the big dream could be in the future, as you also said, Christian, to find new revenue streams when we look at our strategic vertical here. So, for instance, the engagement letter in the audit industry, fulfilling the annual report. You can, you know, there's a lot of opportunities where an auditors, for instance, has manual tasks to put on automations on software.
Yeah. And maybe you can also unfold the KYC potential. As there's here on the slide, you can see how much of it there's added from the uplift from the KYC solution. Is this product still, or can you still penetrate a lot of? Can you give us some flavor on how big is the potential here?
Basically, the potential is that at least 2/3 of our customer base, approximately, would need a KYC solution. That's not the same that they have bought ours, but at least that's our target for our existing customer base, 2/3. And then on top of that, there are also new customers that start with, okay, the urgency right now is the KYC, so they would start buying the KYC before the sign. And this diagram that we are showing here, this graph, can also show we both have on a new Penneo KYC and also uplift. And so an existing auditor buy KYC, that's an uplift, And if they start with KYC, that's a new biz. In this case. So we believe there is a potential, and from a pricing point of view, it's in the on an equal level, more or less. I think so the average deal size on KYC is as a minimum on the same level as a sign.
Perfect. Well, we are running out of time, so I would like to thank you very much for the presentation, Kasper and Christian, and thank you for answering the questions.
Thank you so much.
Likewise.
See you.